All righty. Hello, everybody, and happy Tuesday. Today, as far as collective concerned, is Tax Tuesday. And this is a session that is essentially an AMA session. It's an Ask Me Anything session. You can ask me questions surrounding, best business practices, best tax practices, best way to handle, the accounting for a business, the payroll for a business, the whole shebang, and I'll do my best to answer it. And just real quick, who I am, my name is Luke Robinson, and I'm a business advisor for Collective. And we, at Collective, are a group of professionals that will handle the whole shebang when it comes to S Corp formation, payroll, bookkeeping, and tax filing. And essentially, you can think of us as an all in one solution, an all in one platform for a self employed individual. But today, we've got some questions to answer. So let's get right in it. And before I do that, it's important to note that just consider this information, just what it is, information. Don't consider it, official tax advice or legal advice or anything like that. The tax code is really complicated. Some of the things that I'm saying could be incorrect. It changes all the time. I could be wrong, or your tax situation just doesn't apply to the things I'm saying. So it's a good idea, before you make any decisions based on this information, speak to a tax attorney, a CPA, or a tax professional like that. But let's jump into it. I heard Collective is backdating S Corps. Can you talk about this more? Yes. So essentially, you can think for right now, there are ways if you currently have an LLC in place, or you have even if you have a corporation in place, or some sort of business entity in place, you can backdate potentially an S corp election, and we will assist you in doing that. And essentially, what we'll do is we'll help you backdate it to July 1st of this year. That's when the S corp election would start if you came on board with the Collective. So essentially, if you already have an LLC in place, we'll file paperwork. We'll file a form 2553, and that makes the S corp election. And on that form, we'll list an effective date of July 1st of this year. And how it works with Collective is that's when your S corp starts. July 1st. Especially if you already have an LLC in place and whatnot. But when you first came on board, we'd backdate the S corp election. We would clean up your bookkeeping, if need be, kind of go back to that date, organize the books, add any expenses that need to be added in, just kind of get you squared away. Then we'd handle your payroll, because you will be on payroll now that you're an S corp. That's part of it. That's an element of it, is that you will pay yourself a reasonable salary. But we'll assist you with that. Collective will handle that. And then we would also take over your bookkeeping as well. And we close out the books each month. So every month we'll give you a profit and loss statement, a cash flow statement, and a balance sheet each month for the books. And then you have someone on your team here as well called a member relationship manager. And you can essentially think of them as your account manager. So, if you ever have a question, need some guidance on something, or you're just not sure how to proceed, you can have a conversation with them at any time. And then as we run your books throughout the year, we'll also calculate your quarterly estimated tax deposits, because you'll still have those with an S corp. And then once we reach the end of the year, we'll file your S corp tax return, because you have one of those now too. Now that you're an S corp, you've got a business return that kind of comes into existence. So we'll file that one for you as well. So when it comes to the business, we pretty much do the whole shebang. What's the difference between an S corp and other formations? Well, first of all, and there's a ton of people that have kind of a misrepresentation about what it means to be an S corp, or what an S corp is exactly. An S corp technically is not really something you form. It's not a business entity. It's a tax election. It's a way to ask the government to tax your business entity in a different way than what it's currently being taxed. So, for example, if you just set up an LLC, then you're automatically taxed as if you didn't have an LLC. You're automatically taxed like a sole proprietorship. That's essentially what that means when you set up an LLC. So before like when you're just an LLC, all of your money or a huge chunk of your money is subject to the self-employment tax. Flat tax rate of 15.3%. And making an S corp election on that LLC is what reduces that self-employment tax. But that's the difference: is that an S corp is not a business entity; it's a tax election. So you can do it on LLCs, or you can also do it on a corporation. If someone set up a C corporation in a state, then you can make an S corp election on that. And before, like, let's just say if you just set up a corporation, then you're doubly taxed. You're taxed at the corporate level with the corporate income tax, and then you're taxed at the shareholder level or the employee level when money flows down to you as an employee, as a shareholder. So you get doubly taxed. Making an S corp election on a corporation turns it, in a tax context, it turns it back into a pass-through entity, to where it removes the corporate tax. It does all of that. You become an employee of your own business, and that's the difference between an S corp and business entities. Who should consider becoming an S corp? And I'm going to go ahead and repeat two questions that have been asked. One is, who should consider becoming an S corp, and two, when does an S corp make sense? And they kind of tie together. Who should consider becoming an S corp is someone that has consistent cash flows, someone that is making a certain amount of money in a 12-month time period, in a year's time. And what we say here at Collective is we give a general recommendation of around $60,000 in net income. As long as and when I say net income, I mean after your business expenses, after you pay, your marketing expenses or contractors or things of that nature, you get to your net income. So we suggest $60,000. And the reason why we suggest that, and again, before I do, and please excuse my dog, I have a mini Australian Shepherd. His name is Charlie. He's my child, but he might make a few appearances in the background. But the reason why we give a $60,000 recommendation is because when someone is making around that kind of money and they elect the S corp tax status, generally they're saving around $5,500 a year in the self-employment tax. Again, that's a very general number. That doesn't apply to everyone. For some people, the numbers might be different. But that right there, that $5,500 tax savings is a good, $2,000 above Collective's fee for the entire year. So it's just kind of a good rule of thumb to say, okay, if I at least expect to make this much money, then I can reasonably expect for my tax savings to pay for Collective's fee. Okay, great questions here, and they keep coming. What kind of businesses have success as an S corp? Well, I'm not really going to get into why this is because it's really complicated, but really the S corp status is usually best for consultant types, like someone that's providing a service, someone that doesn't buy and sell a lot of business equipment or things like that. Usually someone that provides a service is what an S corp is kind of geared to. Oh, okay. How were S corp savings calculated? Well, before you become an S corp, like if you're just a sole proprietorship, or even if you have an LLC set up, like even if you've taken that step, you pay a lot in the self-employment tax. And as I mentioned earlier, like the self-employment tax, it's a flat tax rate of 15.3%. Before you become an S corp, the entire, or a huge chunk or the entirety of your net income is subject to that self-employment tax. So, for example, let's say that your net income is $100,000. Before you become an S corp, you calculate your self-employment tax by taking 100 grand and multiplying it by 15.3%. Every dollar is subject to that tax rate. What happens with an S corp election, though, is essentially you become an employee of your own LLC. You become employed by your own business. And you're still the owner, of course, like it's still your business. You still own it, literally. But for tax purposes, you literally become employed by it as well. And since you're employed by it, your business will pay you a salary. It'll pay you a wage, just like you'd receive if you work for someone else as a W-2 employee. But the advantageous thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary amount now. So, for example, like I mentioned earlier, let's say that you are making you're netting $100,000 in your business. And let's say with an S corp, let's just assume that you're paying yourself like a $40,000 salary, something like that. For whatever reason, that $40,000 is a reasonable amount in this person's situation. That first $40,000 is still subject to the self-employment tax. You still pay it. But the other $60,000, or just the rest of your money, like outside of your salary, those are considered distributions to yourself. And, conceptually speaking, you can kind of think of that money as dividends. Some people will use that term. They'll call them dividends. But long story short, that chunk of money is no longer subject to the self-employment tax at all. So, assuming that you make that much money, and going back to that, the question, how you calculate your savings in that situation is you take $60,000 and you multiply it by 15.3%. And what is that? I think that's like, I want to say that's $9,200, somewhere around there. So once you reach a certain income level, then going the S corp route could potentially be pretty advantageous. What are ways we can create an S corp? Well, there's always a step you have to take before creating an S corp. And that step is creating a business entity. You have to set up a business structure before you can even make an S corp election. So you have to set up an LLC, a partnership, which is another way of saying a multi-member LLC. It's when two or more people are on an LLC. That's what a partnership is. Or you have to set up a corporation. And then what you do is you'd file paperwork with the IRS and you'd make an S corp election on that LLC, on that partnership, or on that corporation. Can a partnership make an S corp election? Yes, it can. So like I said, a partnership, it's when two or more people are on an LLC. That sort of structure can make an S corp election with the IRS. It can. And, probably depending on what kind of partners they are, they might need to be on salary. So there's some technical things to keep in mind when you make an S corp election on a partnership. Why would you not want to go the S corp route? Well, a few reasons. For one, if you weren't making above a certain income level, that's one of the, I guess, like strikes against going the S corp route. Is because if you're not making enough money to where an S corp makes sense, then why go that route? Like, why go into a more, I guess, like complicated tax situation if you're not going to get any benefit? And when I say not getting any benefit, I mean a lot of times when you're making below a certain amount of money, and with collective we say $60,000. But when you're making below that amount of money, eventually your S corp savings won't be enough to cover the additional costs that come up when you make an S corp election. For one, like collectives cost, or like a payroll processing cost, S corp tax returns, like all of these things cost for tax professionals to handle and platforms to handle. So if you're not making enough money and the expenses that it takes to run an S corp are more than you're saving from that S corp, then it doesn't make sense. You shouldn't go forward with it. But also, there are a couple restrictions that happen or that spring up when you make an S corp election. And for one, you can only have up to 100 shareholders in your business with an S corp. That's just a requirement of it. You can only have up to 100 owners. So that's one. And also, you have to be, I believe, if I'm not mistaken, those owners have to be American citizens, I believe, to own shares in an S corp. I could be wrong on that. I'll have to look on that. But to make an S corp election, you yourself would need to be a permanent resident of the United States. So, like, there's some restrictions on it. Oh, Chris has a good point. He says, "I always miss these. At some point, it would be cool if you would do one of these after business hours." That's possible. That's possible. Let me speak to my team about that, and maybe we can make that happen. But thanks for the suggestion, Chris. For some reason, I never considered that yet. Probably should have. Is being nervous about is being nervous about self-employment a reason to keep my W-2 job? No. Because here's the thing. Well, don't get me wrong. I mean, it is more complicated to be self-employed, to kind of run the show. Like, you have more responsibility, there's more risk, don't get me wrong, of course it is. But with a place like Collective, if you have a really good partner in handling the finances, handling the taxes, then you're good. You're fine. Your business, like, whatever industry you're in, if you're starting a business, that assumes that, you're pretty knowledgeable in your area of expertise. So, as long as you focus on that, focus on making money, success will come, especially in this country. Okay. I believe some more questions are coming in as we speak. All right. Can a nonprofit be an S corp? No, and there wouldn't be a reason why a nonprofit would want to be an S corp. S corps are usually only for profitable business entities. If a business, if like a for-profit business, isn't profitable, or it's a nonprofit, then either of those two probably wouldn't want to make an S corp election. How can you disqualify out of an S corp? Ooh, that's a good question. Well, I, I would say, for one, to keep the IRS happy, it's a good idea to file your S corp tax returns on time, and make sure that you file those. So maybe if eventually if you kept missing S corp tax returns, then they might revoke your S corp election. Maybe, I'm not really sure. If Let me think about that for a second. Hmm. How can you disqualify out of an S corp? I think maybe if you lost your citizenship, with the United States, they would probably revoke the S corp election as well. Um, or if they audited you and examined you didn't, fill out the form right. Like there could be several situations where they might disqualify someone out of an S corp. What's the difference between a C corp, an S corp, and a B corp? Well, that's a really good question. For one, I don't know much about the B corp. Now, all I know is I believe if I'm not incorrect here, I believe B corps are they're still corporations, but they have some sort of special special kind of consideration for um, company missions and equity and things like that. It's usually for business that are kind of mission driven or like trying to not just necessarily they're making money and they're for profit, but they have some sort of other cause that they would like to make better or improve. And I think a B corp is a just nonprofit sort of designation that that will give a company that has those characteristics that are doing good or that have those causes. I'm sorry, that was a rambling answer there. Um, but also it's it's a way it's like companies that are verified to meet high standards of like social performance, environmental performance, transparency, accountability, things like that. That's what a B Corp credential is. A C Corp is a C corporation. I mean that's just a corporation filed with your state, and then the IRS recognizes that corp as a C corp. That's all it is. And then an S corp is anything that makes an S corp election. So an LLC can be an S corp, a corporation with an S corp election can be an S corp, and so on and so forth. And I know, trust me, a lot of that's confusing. Don't get me wrong, but welcome to the IRS. Welcome to the U.S. tax code. Okay. Does Collective support S corp members with certain dates and reminders? Definitely. We handle all kinds of deadline dates. For one, part of the service is we will calculate your quarterly estimated tax deposit amount, which is essentially the taxes that you pay the government every quarter when you're self-employed. You're required to pay them over to the government by yourself. And of course, we'll actually calculate that for you, remind you of the date to pay those, and send you a link on where to pay those, like either to the IRS website or to your state website too, if they have estimated tax deposit requirements. So that's one date. Another date that we help you out with and remind you on is your LLC annual report or biannual report due date. And a vast majority of states have reports that you have to continuously file to keep your LLC in good standing and to keep it up and running. So that's another thing that we'll remind you of. And then, of course, we'll also file your S corp tax return, and that one's due by March 15th of every year. So, of course, that's another deadline that we'll remind you about and handle. Hmm. Here's an excellent question. What kind of support does Collective provide for S Corp owners to succeed? Long story short, where the value of Collective comes in is we focus on this area of the business, the finances, the administration, the taxes, so you can focus on your actual business. So you can focus on what you're good at. Go out, showing people your skills, getting clients, and making money. And that's the entire point of having a business. So that's really, I think, where we help you to succeed is we sort of shift your focus to your actual business and the day-to-day activities that make you money. The bookkeeping, the accounting, and whatnot, that doesn't make you money. Now, it's important. It's important, for insights. It's important to keep in good graces with the government. It's really important to keep, organized financially, but you shouldn't be doing it. You shouldn't be doing it. You should be out there running your business. Okay. I think I have time for one more question here before I have to end our session for today. I think we have a question coming in. Is there a upper limit to the amount of money you have to make um, before maybe revoking your S corp election? That's a good question. Well, I mean, it depends. There might be some periods where you make a bunch of money and you might, for whatever reason, want to move over to a C corp structure or something like that. But unfortunately, it just kind of depends. Like, with so many of these questions about taxes and finances, it just kind of depends on your situation. But that's all the time that I have today. I've actually got to jump and prepare for another call with a prospective Collective member. But just real quick, if you found this conversation valuable, or if you think that Collective might be a good fit for your business, then schedule a call with us. Go to our website, fill out a scheduling request, and you can talk to a business advisor to see if an S corp is best for you and if Collective is best for you.